A warm welcome to you, my dear children. Welcome back to Business and Accounting Studies. We are in Unit 8. We are in lesson number 8, Cash Book and Petty Cash Book. Well, we started Cash Book and Petty Cash Book a few sessions earlier. We have come quite a long way, but still we are studying the cash book. Yeah. So today we have something new and something related to the cash book, which is directly related to the cash book. You must know about these things in order to prepare the cash book. Yes, that's right. What are these? Discounts. Never heard of discounts? Well, if that is the case, children, you must have never gone shopping anywhere. You must be a person who has never stepped out of your house. Is that your case? You have never stepped out of the house. You have never gone to a shopping mall, never gone to buy something to a shop or to a trade center? I don't believe it. That can't be, right? All of us have heard about discounts. All of us have taken discounts at some point in our lives. When we have gone and when we have gone shopping, we have experienced discounts. Yes, of course. So, as this is something that we all know, just a brief description. I think that will be enough for you. Children, discounts are amounts deducted or a value deducted from the list price. A small value which is deducted from the list price. You understand? When the purchase is done, or when you go to purchase something, the trader, the seller, deducts a small value from the list price, from the price which is on the tag, price tag. Small deduction. That is a discount in very short, in a brief way. And there are two main discounts. Well, that maybe you didn't know. I don't know. Sometimes when we discuss about discounts, most of the students, they say, so the two types of discounts, we didn't know. Here you go, the two types of discounts. Trade discounts and cash discounts. Trade discounts, cash discounts. Let's see, children, what trade discounts are. Trade discounts. Trade discounts are also, it has been categorized to two categories, two types of trade discounts. Yeah. Children, trade discounts are discounts which are given to the seller. Trade discounts are discounts which are given to the seller by the buyer. When we buy goods, given to the seller. No. Pay attention. You should be mindful. When you are watching, just don't watch and just don't let the voice of the teacher go through your ears. Take the things, take the points to your head. Discounts are not given to the seller by the buyer. Discounts are given by the seller to the buyer. Right? So discounts are given by the seller to the buyer when we buy goods from shops, from businesses. So businesses, when they sell goods, the sellers, when they sell goods, they allow a discount to the buyer. Let's say I'm the buyer. When I go and when I purchase something from a shop, from a business, the seller might give me a discount, or I can ask for a discount. I can talk to the seller and I can ask him. Yeah, I can say, it's a little too high. The price is a little too high, very expensive. No discounts. Yeah, when we give that expression, the seller knows, this guy is looking for discounts. He's looking for a small price deduction. So, better to give a discount. Yeah, the seller thinks that way, and the seller might give you a discount. So you have to ask for discounts. That's what I'm saying. Without buying the good at the same price which is marked on the tag. Okay. The marked price or the list price. That is called the list price. If you ask for a discount, you might get a discount. Or sometimes there are signboards displayed inside shops, sometimes outside shops, saying that they are offering discounts. Then it's already displayed that they are gonna give you a discount, so you just go and buy the thing that you want with a discount. Those discounts which are given by the seller, which are given by the business to the buyer when we buy goods, those discounts are trade discounts, children. Trade discounts. All right. If we get a discount from the seller, that is a discount allowed from his point of view. From the business point of view, to the business, it is a discount allowed. And from the customer's point of view, from our point of view, that is a discount received. That's what you should understand. So let's go and check out what discounts allowed and discounts received in trade discounts. What discounts allowed and what discounts received are. Read through the text, children. Most businesses sell goods deducting a certain amount from the listed price. This deduction, which was made from the listed price, is called a trade discount. You understand? Simple things, right? This deduction of list price is called a trade discount. Okay? This deduction is a trade discount. It is a discount allowed from the point of view of the seller and a discount received from the point of view of the buyer. Buyer means us or the customers who are buying the goods. To us, it's a trade discount received. That's right. The value to be recorded in the sales or the purchases account should be the net value. Now, that is something you should learn. Children, it says the value to be recorded. Value to be recorded in the sales or purchases accounts. Right? if the business has sold goods, or if the business has purchased goods with a discount. With a discount. How to record the value in the sales account or in the purchases account. That is something we should learn. All right? Okay? Yeah. We'll check out how to record the value in accounts when a discount is given, when a discount is involved. All right. Now, children, it says, very clearly it says, should be the net value. Net value. Can you see that? Let me move this way. It says the value to be recorded should be the net value. Net value. After deducting the trade discount. This is what you should do. You should calculate the discount which is given and deduct the discount from the list price. Deduct it. From the list price, you deduct the discount. Let's say this is the discount. All right, this is the discount. This discount should be deducted. Should be deducted. And then you get the net value, which is after the discount is deducted. The price after the discount is deducted. That price you record in accounts. All right, let's see. Then it says trade discounts are not recorded. That is the most important part here. Trade discounts are not recorded. It's a discount which is not recorded in accounts. Right. Let's see what this really means. Now, children, see this example. This is from the textbook. You can refer to your textbook. This example really clearly explains how to take the trade discounts, how to treat the trade discounts when we are recording in accounts. See the listed price of goods, 20,000. This is the listed price. All right. Listed price. Let's put numbers. Listed price number 1. This is the listed price. Listed price 20,000. Okay. Trade discount to be deducted, which means how much is the trade discount, how much of a trade discount is deducted from the price when the goods are sold. Trade discount to be deducted is 10%. Is 10%. This is 10%. This is the trade discount to be deducted. 10%. What you do is you take the list price 20,000. You take the list price 20,000 and multiply by this 10%. 10% means 10 over 100. 10 over 100. 10% means 10 over 100 as a fraction. 20,000, the list price, multiplied by 10 over 100. Then the answer is the discount. This is the discount. Answer is the discount. This is the discount. All right. 2000 is the discount. You don't record the discount. You just deduct the discount from the list price. That means from 20,000, you deduct or you subtract 2,000, which is the discount. And you get net value. This is called the net value. 18,000. That net value is the value that you record as a double entry in your ledger accounts or in your books of accounts. That net value goes to the accounts, not the amount which is deducted. So I'm gonna point out that sentence which is highlighted in your textbook. Trade discounts are not recorded. So this 2,000 is not recorded. It should not be recorded in any accounts. No. But subtract it from the list price 20,000 and the net value, which is 80,000, goes to your accounts. All right, let's see this in a practical example. Here you go. Better weaving. I want you to see this. A trade discount, children, it is given by the seller, or I will write the business. This is the business. Seller is the business, right? The businesses are selling us goods. Seller or the business. The seller or the business gives the trade discount to the buyer. Buyer is the customer. Buyer is the customer, right? So I can write customer here. Customer. It's clear, right? These are not things that are hard to understand. The business or the seller gives the discount to the buyer, right? So in the point of view of the business, this is a discount given. In the point of view of the business, this is a discount given. This is given, right? It's given to the seller. Given to the seller, right? No, children, it's given to the buyer. Pay attention. The business, from the point of view of the business, it is a discount given to the buyer. To the buyer. That can be us. Okay, we get discount. So for us, it is a discount received. Okay, now it's clear, right? This picture shows how the discounts, trade discounts, are displayed in shops and shopping malls by businesses. How trade discounts are given, how they are displayed. All right. I'm sure that you have seen ample examples or practical in your day-to-day lives. Everywhere you go, in most of these shopping malls, in shops and showrooms, they give discounts. Likewise, they display how much of a discount is given. See, this is a 70% discount. It is a sale which is giving 70%. That's a huge discount. Like from the listed price, 70% will be deducted. That's a huge deduction. It's a huge discount. It's a trade discount. All right? 70% off. 70% off. Well, you should find this shop, right? Yeah, that's a big discount for us. Discount allowed from the business, discount received to us. Yeah, let's find out, children, how the business should record this in accounts as we discussed. We have an example, all right? In this example, children, I have taken a small business called Leather Shine. Okay, Madhukar is carrying out a small footwear business called Leather Shine. Madhukar is a businessman. He has a footwear outlet, a footwear business selling shoes called Leather Shine. Okay, he has provided the following information. Now you have some information. Purchased a stock of 60,000 for cash. Received a trade discount of 10%. He has purchased or bought for cash a stock of 60,000. The Madhukar bought goods, bought a stock, right, to the shop, paid 60,000 for the stock. So it's a cash purchase. That is what we say, a cash purchase. But he received a discount. He received a discount when he bought the stock. A trade discount of 10%. Let's calculate the trade discount. 60,000 is the list price. Now we take the list price. $60,000 is the list price. We take the list price. Okay. Multiply by 10%. And we multiply by 10%, which is the trade discount. Here, can you see the 10% trade discount? Trade discount 10%. Let me circle it for you. 10%. How do we take 10%? 10 over 100 as a fraction. Then you do the math. Simple. You do the math. Cut the two zeros. Cut the two zeros. And multiply by 10. You take the answer 6,000. Alright. What you do now? You don't take 6,000. You don't take this one. You deduct 6,000 from 60,000. Let's do that in the corner here. You take 60,000 and you deduct the discount amount, the discount value, which is 6,000. All right. 60,000 minus 6,000, and you get the answer. How much? How much is the answer, children? 60,000 minus 6,000 is 50,000. 54,000. 54,000. All right, so that is the net value of this transaction. Net value. Now show me the list price of the goods, children. List price. List price, children. This is the list price. This is the list price. You don't record the list price because there is a discount that should be deducted as we did here. So this is the list price. List price. This is the discount. Discount 10%. Discount percentage, children. And this is the discount amount. The value of the value of the discount. Okay, that should be deducted or subtracted from the list price, and this is the net value. Net value. 54,000 is the net value. All right, let's do the same with the other transactions we have. Next transaction we have, children. Purchased on credit from Black Bull Shoes. List price 48,000. Notice these things. The first purchase was a cash purchase, 60,000 for cash, right? That means Madhuka, when he bought this 60,000 of a stock, when he purchased this 60,000 stock, he paid cash then and there. He paid cash and he bought the stock to the business. He brought the stock to the business and paid cash for that stock. Not in the second transaction. Second transaction is a credit transaction. Purchase on credit, right? From Black Bull Shoes. Black Bull must be a shoe supplier, not Red Bull. Black Bull. Black Bull Shoes. List price 48,000. Okay, but he got a discount of 5% from Black Bull. Let's do the math. Take the list price. Where's the list price? Where's the list price? There. List price is there. It's here. 48,000. Take it and apply the discount to that. 48,000 and apply the discount to that. How much is the discount percentage? It's 5%. So 5 over 100. It's like it's teaching a lower grade. You don't need to get this type of an explanation, right? I don't need to explain this so much. Just get the answer. Get the answer. It's 480 multiplied by 5. How much? 2,400. Right? Right? 2,400. This 2,400 should not be recorded in accounts. No. You don't take this to accounts. You deduct it from the list price. Deduct it from or subtract it from the list price. 48,000 minus 2,400. Right? And the answer you get is the net value, children. See the net value. You get 48,000 minus 2,400, 40. Yeah, 45,000. 600. See the net value. Right, children. I want you to do the third transaction. This one. Can you? Sold a stock, list price 12,000 and a trade discount allowed is there. This is not a purchase, not like the previous ones. First transaction was a purchase, second transaction was another purchase. But third transaction is a sale, which means Madhuka is selling now. He is selling goods to customers. He has sold a stock of goods or some pairs of shoes. Madhuka has sold to a customer worth of 12,000. And Madhuka has allowed a discount of 5%. 5%. Do the let's do the calculation. Children, the list price is how much? The list price is 12,000. Okay. Let's take 12,000, the list price, and multiplied by how much? The trade discount percentage is 5. So we put 5 over 100. 5% means 5 over 100. Right? And we get the answer. How much is the answer? 600. Yeah, do your math. 12,000 into 5 over 100 is 600. And the 600 should be deducted from the list price. Okay. What is the list price? 12,000 is the list price. Then what you do is 12,000 minus 600. Yeah. 11,000 11,400. All right. That is how you calculate the net value by deducting a trade discount. Don't take the trade discount, which is the calculated discount value. No, don't take the discount value to your accounts. Do not take the discount value, the trade discount. No, we do not take the trade discount value. The discount value should be deducted or subtracted from the list price in this manner. And take the net value to your accounts. Take the net value only. All right, children. That's that. One last question before we move on. Tell me how to record this first transaction, the first one, in accounts. Tell me. I want you to tell me how to record the first transaction, this one. The double entry. I'm asking you for the double entry, children. How to record this as a double entry in your ledger accounts. No? Yes, somebody knew. Thank you. How to record this, my dear? Tell me. Yes? Yes. Yes, very good. Very good. It is a cash purchase. So, as you said, a cash purchase, in a cash purchase, we have to spend cash, the business point of view. We are looking at the transaction from the business point of view, okay? Not from the customer's point of view. We are recording the transactions in the business, in Madhuka's business, all right? In Madhuka's business, children. We have to record the transactions in the business, right? So we look at the transaction from the business point of view. Madhuka has purchased, which means when the business is purchasing goods, more and more goods purchased, which means more and more cash going out. It's a cash purchase. We have to pay for the goods we purchase. So cash is credited. Cash book is credited. 60,000. You credit 60,000 cash book. No, I told you not the list price. You take the net value. Take the net value, 54,000, and credit the cash book with 54,000. What is the debit entry? Tell me the debit entry. Yes, that's right. Credit the cash account or cash book. Debit the purchaser's account. 54,000 credit cash book, 54,000 debit purchaser's account. That's right. Good. Let's take the second transaction, this one, shall we? Purchased on credit. It's a credit purchase. We get goods, okay? We get a stock, right? But we don't pay cash. Cash is not going out, which means cash book is not relevant to this. Anyhow, the list price is 48,000. It's here, 48,000. Okay, but the net value is 45,600. It's here, 45,600. This is the net value. What do we take to our accounts? Net value. Tell me the double entry. Somebody tell me the double entry. Just like in the previous transaction, we don't credit the cash account because cash is not paid out. You don't credit the cash book because cash is not going out. It's a credit purchase. You don't credit the cash book, you credit the creditor's account. In this instance, in this transaction, the creditor is Black Bull Shoes. Black Bull creditor. Credit 45,600, the net value. Okay. Creditor credit, purchases account, debit 45,600. That's right. Yeah, correct. Last transaction. Just verbally, somebody tell me how to do the double entry for the last one. Yes, very good. That's right. It is a sale. It is not a purchase. It is a sale. Okay. And the list price is 12,000. This is the list price, 12,000. We don't take the list price because there's a trade discount deducted. We take 11,400. 11,400. We take 11,400. Tell me the double entry. You should know these things by now. Double entry. Tell me. All right, good. I appreciate your attempt, your effort. It's a sale, children. We sell goods. From the business point of view, we sell goods and we get cash. Cash comes in. Cash sale. Okay. So if the cash is coming in, cash increase, that means cash debit. Sales credit. That is the double entry. Cash account, debit, sales account, credit 12,000. Is this the amount? No, this is not the amount. This is the list price. We should take the net value, which is 11,400. Cash debit, sales credit. Okay. Before moving into the next part, which is the cash discounts, I will very quickly draw the accounts and record these transactions as double entries. Yeah, we talked about double entries and verbally I told you which account to debit and which account to credit. Yeah. But just because this is the very first time you are coming across discounts, just a quick demonstration, I'll show you how to record the debit and credit, the double entries in accounts. Okay. We have a blank here to draw our accounts and to record these transactions. Okay. First transaction, the first one, purchased a stock of 60,000 for cash. It's a cash purchase. It's a cash purchase. And a trade discount is there, it is deducted, is subtracted, and net value is taken. The net value is 54,000. What is the double entry? What is the double entry to record a cash purchase? Purchases credit? No. Purchases debit, cash credit. Right? So this is what we are going to do. We draw the cash account. We draw the cash account or the cash book. First, we should draw the T format. Okay. Narrow. What is the method I gave you? Small things lead to big things. Right? Again, on the credit side, small things lead to big things. Headers. Yeah. Let's show the debit and credit sides. Debit, credit. And headers, children, headers. Date. What is the next column? Receipt number. Receipt number. Details. And amount. If you want, children, I told you last week too, there is a ledger folio column here which is not really necessary. But it's better to draw it. The ledger folio column. It's not going to be used. We will not use that column. This column. Okay. Yeah. And on the credit side too, date, voucher number, details, amount. If you won't draw the ledger folio column. All right. This is the cash book. Children, this is the cash book. After we draw the cash book, we draw the purchases account. Shall we draw it here? Purchases account. Purchases account, debit, credit. Okay, I'm just drawing the T formats only, but in exam it's better you draw the format with columns, the full format with columns. Well, just to make it quick, date column, description column, and amount column. Credit side also date column, description column, and amount column. This is the T format. Right, that is the purchases account. What is the amount now? We are going to record the first transaction. Eh? Yeah, we are going to record the first transaction. First transaction purchased a stock of 60,000 for cash. That means we already know the double entry. Purchases account debit side, purchases account debit 60,000. Cash account credit 60,000. Yeah. Let's put the details or the description. This name goes to this account, or in the cash book description is purchases, and in the purchases account description is cash. There you go. Very simple double entry demonstration. Likewise. Is that all correct now? Correct, right? All correct? 60,000 and 60,000. 60,000 purchases account debit, 60,000 cash account or cash book credit. No, children. No, no, no. We made a mistake. Who noticed? Who noticed the mistake? Tell me now. Who noticed the mistake? Children, this is the whole point of teaching you trade discounts. This is the whole point of teaching. This is the whole point of doing trade discounts. I very clearly told you, do not take the list price. This is wrong. List price is not taken to our accounts. Which value is taken? Net value is taken. If somebody noticed, that's very good, that's excellent. You are excellent. If you noticed the mistake we did, that is excellent observation. That is excellent observation, and that is excellent understanding. Okay. We do not take the list price or the trade discount to our accounts. We subtract the discount from the list price and take the net value to the accounts. All right, children? All right. Let's correct the mistake. Let's correct it. All right. Now how much, what is the value we should record here? What is the value? 54,000, not 60,000. And we do not record the discount, which is the 6,000. No, we record the net value, which is 54,000. All right. That is what I wanted to emphasize. Well, that is what I wanted to focus here, to draw your attention on how to record the double entries when a trade discount is deducted. Okay. Right. So that is the first transaction. Let's go to the next transaction and finish it off quickly. Purchases on credit from Black Bull Shoes, list price 48,000. We don't take the list price, we deduct the discount and we take the net value, which is this one. Okay, 45,600, that is the net value. And tell me the double entry. Tell me the double entry. Tell me. It's a credit purchase. Credit purchase from Black Bull Shoes. Tell me. Credit purchase. Cash is not involved. We haven't paid cash. So credit purchase means purchases account debit, creditors account credit. Good. Let's go and see. We have the purchases account. We just need a creditors account now. Let's I'll quickly draw a T format, children. I'll quickly draw a T format, children, for the creditors account. Okay. This is the creditors account. Creditor, if you want, just mention the name because the name is given. Creditor Black Bull. Not Red Bull, it's a Black Bull. And the debit, credit. What is the amount that we should record, children? We should record second transaction, right? This one. Not 48,000, 45,600, which is the net value. 45,600 credit in the creditors account, debit in the purchasers account, right? Creditor Black Bull is the description here. Creditor is the description in the purchase account. Purchases is the description of the creditors account. Purchases. Don't forget to put the date. Okay, the dates are required. In this example transactions, we don't have dates, but don't forget the dates when you're recording in accounts. That is done, and to finish off, let's take the last transaction. Sold a stock of list. Sold a stock, list price 12,000. We don't take the list price, we deduct the discount and we take the net value. And we know the double entry of cash, the double entry of a cash sale. This is a cash sale. Sold a stock, list price 12,000, and the trade discount is deducted. A cash sale, what is the double entry, children? Double entry, cash sale. Selling for cash and getting cash then and there. Cash comes in, so cash debit, sales credit. That's right. We already have the cash book. We just need a sales account. Let's draw that. A sales account. Shall I draw the sales account here? Sales account. Let's name it sales account, and debit and credit sides. Debit and credit sides. Debit and credit. Sales account credit. How much is the amount? It's not the 12,000 we take the net value 11,400. 11,400 credit in the sales account and debit in the cash book. 11,400. Yeah, that description cash book should be description here. Cash and sales account should be the description here. Sales. There you go, children. Recording of transactions with trade discounts. Remember, trade discounts are not recorded. They are deducted from the list price and the net value is recorded in accounts. Bingo. Now we can move on to cash discounts. Cash discounts. Children, these are the more important. These are the discounts which are recorded, which are taken into our books of accounts. The more important type of the discounts. So why did we learn how to record trade discounts? Why did we do an example, and why did we record trade discounts? Well, it's easy. If you don't know how to record a trade discount, you will get the transaction, you will record the transaction wrong in the first place, and even the cash discount then will be wrong when you calculate it. Right? So trade discounts first of all should be deducted and net value should be taken. And that net value comes here. There's another discount given, right, on the net value. Let's read out cash discounts. Cash discounts, all right. Cash discounts come into being when amounts are received from debtors and paid to creditors. Cash discounts come into being, they come into play when amounts are received. When amounts are received. And when amounts are paid to creditors. Amounts are received from the debtors when we get the money that they are owing us, the customers are owing us. To get the money the customers are owing, and to pay the money that we are owing to our suppliers. Right, let's go into detail. There are certain instances where a condition is included in the invoice to encourage the customers to settle their outstanding balances. There are certain instances. Sometimes a certain condition is included in the invoice. Something is included in the invoice, a sentence, a condition, right? To encourage the customers to settle their outstanding balances. Wow, what does it mean? What does it mean, children? To encourage the customers to pay their outstanding balances. pay. Pay. We are encouraging you to pay. By including a certain condition in the invoice. You know what invoices are? Invoices are source documents. In the invoice, a certain condition is included. Let's see. Such that a percentage from the outstanding balance would be deducted from the amount due if that amount is paid within a specific period of time. Let me give this to you in a really, really easy manner, in a really simple way. It's like this, children. Now let's say that Madhuka, who is the owner of Leather Shine shoes, Madhuka, he sold goods worth of 12,000, the last transaction which we discussed earlier. That sale, let's assume that the sale was done on credit. In our business, we are the bookkeepers or the accountants of Leather Shine. In that business, a sale of 12,000 was done on credit. We sold goods to our customer, one of our customers. Didn't get the money. It's a credit sale. So an invoice must be raised or issued to the customer for that transaction. In that invoice, we have mentioned a condition saying, if the outstanding is paid before a period of 2 weeks, before 2 weeks, if the total outstanding, the total outstanding is not 12,000 of the list price, we deducted the trade discount and the outstanding amount was how much? The outstanding amount was 11,400. That was the outstanding amount. That amount, if the customer pays within 2 weeks, for that prompt payment, we are going to offer another discount. How is that? Well, that happens, children, that happens in real life. That happens in real life. Most of the time in these credit transactions, in credit sales, in order to encourage that customer to pay the money quickly, to get the money from the customer quickly, we tell him that the Mahatala, if you settle this amount, කලින් ගෙවුවොත් තව discount එකක් දාලා දෙන්න. It happens. This is the real scenario. If the customer pays the amount that he is owing us, that he has to pay us, within 2 weeks, we say that we will deduct another discount. Let's say 5%. Another 5% will be deducted. That discount which is deducted when the customers or debtors, settle their outstanding amounts, that is a cash discount. Yes. So I hope you got that clearly. Did you get that clearly? That is what here the textbook says. Okay. So when the amount is paid within a specific period of time set by the business, this amount which is deducted from the amount from the net value of the transaction, from the amount due. That is called a cash discount. All right. Now we learn about the two types of cash discounts. The two types: discounts allowed and discounts received. Again, discounts received first. A discount received is the amount deducted by the creditors from the amount payable by us. When the business pays it within the time allowed by the creditors. Children, discounts received is a discount which we get, the business, our business gets from the creditors, from our creditors. We get a discount. Okay. When we pay the amount due within the given period of time to our creditors. All right. Remember, discounts received is an income to our business. It is a benefit. So we consider it as an income to our business. Discounts received are created when creditors are paid. Therefore, it is easy to record the discount received in the cash book. Discounts received are recorded. Discounts received are recorded in the discount column. Now that is something new, which is separately drawn in the credit side of the cash book. Now that is something new. Yes, I know that you noticed it. Children, we are going to change the format of the cash book because of cash discounts. We are going to add one more column to the cash book, to both sides of the cash book. Debit side also. Debit side is going to get one column, one additional column. Credit side also. The credit side also is going to get one additional column, which means the cash book format slightly changes because of cash discounts. Okay. Earlier when we learned about trade discounts, we very clearly, I told you, we do not enter the trade discount amount, the trade discount value to the cash book or to any other books. We don't enter the trade discount. We just deduct the trade discount from the list price and take the net value to our accounts. But here in cash discounts, we should record the discount value. Got it? Okay. So as we read on, discounts received are created when creditors are paid. The discount received, the discounts that we receive from our creditors. Okay. Therefore, it is easy to record the discounts received in the cash book. Discounts received are recorded in the discount received column, which is separately drawn in the credit side of the cash book. When we pay to the creditors on time, they give us discounts. They deduct a small amount from the price. Small amount from the price, from the value. That's a discount received. So, the discount received should be recorded in the cash book and in the other books and in the other accounts too. Right? Now let's check out discounts allowed. The deduction made on the amount, receivable from the debtors. An amount or a value deducted from the amount receivable from the debtors. That means if creditors are on this side, like I showed you, if they are above us, creditors. Debtors are below us. Let's just think that way. Just think that way. If the creditors are above us, they are above us, and we get discounts from them, discounts received. On the other hand, debtors are below us, okay, below us, and we give discounts to the debtors. Discounts allowed, discounts received, discounts allowed to debtors. That is what we learn here. If such an amount is settled by the debtors within a given period of time, within a allowed period of time by the business, that discount which is given to the debtors are called a discount allowed. Okay, it is an expense from the point of view of the business. It is an expense from the point of view of the business. I mean, from the point of view of our business, the discounts allowed to the debtors are expenses to us. Discounts allowed given to debtors are expenses to us. All right, expenses, which means the amount that we should get is not fully paid to us. We cut off another certain amount from that value that we should get, which means the debtor is not going to pay us the full value, because we are going to give him another discount. We are going to allow him another discount. So that's it's a loss for us. It's an expense. Okay. All right. Good. Accordingly, since discounts allowed are generated when cash is received from debtors, it is easy to record the discounts allowed in the cash book. A separate column should be drawn for discounts allowed in the debit side of the cash book. Right, so discounts allowed are in the debit side of the cash book. Discounts received are in the this discount received column. Discounts received are recorded in discount received column, which is separately drawn in the credit side of the cash. Discounts received are in the credit side of the cash book. Right, children, we learned about discounts today, about discounts, both discounts allowed and discounts received. We learned about both discounts. Is it discounts allowed and discounts received? No. The main discounts, the main categories of discounts are trade discounts and cash discounts. So we learned about trade discounts and we learned about cash discounts. Under trade discounts, discounts allowed and discounts received are there. Under cash discounts also, discounts allowed and discounts received are there. So the main two types of discounts, trade discounts and cash discounts. We learned about both discounts today. We learned how to record, how to deduct, how to subtract the trade discounts and record the net value. We learned how to do that. And we learned how the cash discounts are applied. What cash discounts are. Under cash discounts, both discounts allowed and discounts received. Right, children? I hope you understood all that we did today. And we are going to record cash discounts with an example, and we are going to draw the cash book with discount columns in order to record cash discounts. So I hope to see you again in the next session. We are going to finish off cash book with discounts. Mm, hopefully, we'll meet up again, all of you, all my dear students, and we'll finish off this chapter of Cash Book. Thank you for being with me. I hope to see you soon. Thank you very much.